I have with me in our Lagos studio Mukhtar Mohammed, Chief Executive Officer of Finance with Mukhtar. He joins me for more on the market of this. Thank you so much for joining us on the show today. It's a welcome back from the October 1st holidays. Let's talk about how this lingering sentiment, the bears holding on to the market, is taking over once again leading into October. This was expected.
Very, very expected, knowing that we just got the rate hike before the holiday and we saw the movement already in the market. We saw a lot of investors looking for safe havens over the returns they've made in the market, and knowing that the last quarter, the market finished on the red, also had lost about 5.83%. So investors are already apprehensive about the final quarter of the year, because of this rate hike, inflation, volatility. Forget our exchange rate volatility is still there. We still have local investors trading the market. Most of them are now moving to the bond or to the treasury space. So definitely that sentiment will be there for some time, but they are also looking at good entry point and good exit point to make sure that they have a bit of capital appreciation. I think that's basically why most investors that are interested in the equity market are waiting for now.
And what's your forecast now? We've recorded bearish sentiment for the most part. You've also made mention of the fact that we are looking at the equities market losing its attractiveness here. So people are now looking at stability, long-term fund. How do you see that panning out for the last quarter?
If you're looking at stability, then you may have to look at the equity market. But if you're looking at short-term game in how to preserve your gain that you've gained from the equity market, then you need to look at the fixed income space. Because when we talk about the equity market, we're looking at the best performing at the moment, about 15-point-something% best in the whole
investors with a more aggressive front.
So what we're looking is investors that are ready to stay for the long haul. If you have a long-term planner, this is the best time, because you have good equity that are selling at a low valuation. Most of the stock are selling at a 52 weeks low, and it gives investors a good entry point. And most of these stocks are liquid stocks that will be paying dividend, not might be paying dividend. Those two stocks have paid interim dividend. They've not relented their dividend payment. Some of them have even improved upon it. Especially a bank like Fidelity Bank has even improving for the first time, is paying an interim dividend. So there's a lot of opportunity in the market. But if you're a short-term player, you begin to think of the fixed income space, especially because of the rate hike going. That's, for me, that's the attractiveness of that setup.
And taking a retrospective look at the performance of the market now, when you take a look back at the half-year earnings report, that was not enough of excitement for the market. Now, once again, we're looking at intricacies playing out. The banking stocks, however, irrespective of the CBN's move, especially with regards to mop-up of liquidity and all of those, how do you see the banking stocks still remain the most favorable stocks, the haven for investors to have their monies put?
Basically, why the banking stock is still the haven for investors is just the liquidity and the cash payment that investors know. And during the times of recession, liquidity becomes king. And so most investors are looking at those banking stock in terms of valuation, in terms of liquidity, and in terms of price appreciation. We're going into an election year. The good thing about it is that every towards an election year, we see this thing play out. But by the time we begin to see that, this election is going to end peacefully, and the capital market is the first trigger that gets that feeling. Also, definitely, if you're looking at that, then you look the banking stock. The fear people are having is the hike in interest rate. We see more
huge sell-offs just last week.
Yeah, we will see more non-performing loans. Especially, we've been seeing that in the half-year report. But we're waiting for the third quarter result. Maybe something might just trigger investors to look back. Now, what we're saying is that the investors are reacting to the monetary policy. They are reacting to what the monetary policy have done. Now, to bring stability would have been if the fiscal policy have come up with any plan to navigate about what has happened with the monetary policy decision. But as it stands now, you know that governance is non-existent because we are in an election year. So the fiscal side is not coming with any policy that will be like a safeguard for investors to look into the equity market for now. So definitely now, investors is trading the investors are trading cautiously, and they feel that the fixed income space is the best space to trade cautiously.
And then this same bearish sentiment is also lingering when you're looking at the subsectors, industrial goods, insurance. Oil and gas really is just the only competitor here when it comes to putting a more robust front against the banking sector. But now in terms of doing an analysis of what the future holds for these, let's also look at the commodities market as well, especially with cocoa production dwindling in Ghana. We are having the cocoa pod disease here. Nigeria is looking to fresh targets of about 500,000 tons yearly by 2024.
Well, I thank God Nigeria is looking at it towards 2024, so maybe whatever challenges would have been over by
There's
2024.
no magic wand we can wave.
So definitely, I think that's a sector that the exchange group have been looking at to bring investors, boost our earnings and diversify investment for investors. I think it's a good thing. What we're talking about 2024. We want, I mean, they're coming up with strategy. They want to come up with a robust commodity market. I think that would be a very, very good product from the exchange group, and that also will help investors to begin to diversify their investment.
We cannot wrap up the conversation without talking about some highlights we had from last week. This is the first annual general meeting from the NGX Group, the step down of the step down from the board chairman as well, Mr. Ogunbanjo. We cannot also remove the fact that we also seen the suspension of the capital raise of 35 billion naira from the NGX, expected to look at business expansion. All of these are on hold. These were plot twists that are going to redefine how the market will perform, the NGX performance.
Well, step down of Ogunbanjo, we've not got clarity on why he's stepping down. Maybe his tenure have expired, or whether I don't think there was any boardroom
issues between stakeholders and
him.
The NGX.
So definitely, so that would have meditated that, and that is good for corporate governance. That shows that there's a lot of openness and integrity in that space. Now, about the stepping down of the 35 billion in terms of suspension of the 35 billion, I think it's the right decision to make, especially now the equity market. It's not the right time to begin to look for funds. Investors are looking for safe havens. No investors is thinking of coming to invest into an investment because, again, we are going to an election year. We're also battling inflation. We are battling FX scarcity. We are battling low patronage from foreign direct investors, on portfolio investors. I think the best decision they took was to suspend it for now, because it wouldn't have attracted the kind of investors they want, because of the environmental climate at this time is so harsh that you don't want to do anything that would tempt the confidence that's already coming into the market.
To ask, how long will we wait before we feel the big pinch from last week's move by the APC?
Well, we might wait a little. It might come in shortly, it might come in later. But one trigger that might help them mitigate against this might just be if we have a very, very successful election. Immediately we do have those successful elections, the first place, like I said, the catalyst that says is the stock market. And I said it, and I think the three popular presidential aspirants, I'm not overlooking the other, is that most of these presidential aspirants seems to be the aspirant that was talking about the economy. And they seem to have the pedigree, they seem to have the magic word to turn the economy, if you go by their pedigree in the various sides of government they've been before. So definitely, I think that will be the trigger that will help meditate against what we see the exchange doing. But in the short term, I think we'll still see those negative vibes after this, because the investors will begin to look, is there stability in this place? Is it that they are not being...
and that's already touching on our foreign portfolio investment inflows at this point in time.
Definitely, that's what they would think. But I think in the long run, if we have a successful transition, which I believe we will have, then the market will react positively.